Hey guys, it's a market update. In this video, where exactly are we right now in the cycle? The Bitcoin cycle, but the market cycle, because the FTX situation has taken everyone's eyes off the ball. And what's happening now is a fundamental shift. A lot of the rhetoric from the Fed has stopped. No more hawkish rhetoric. Jerome Powell out this week in a kind of mixed, bits of dovishness, bits of hawkishness. He knows, he's seeing all this data come out, and the market is starting to price this in as well. Now, that doesn't mean everything's positive, but what we're seeing now is a massive breakdown in economic figures, and the Fed is just running out of time because they can't remain hawkish when the economic figures are crumbling. Let's have a look at this data and see where we are. As you can see, we've had a decent run this week for Bitcoin, right? We were down at 16,000. We have now broken through this resistance. This is actually quite a tradable range right here, and it's quite nice to trade this. As you can see right here, we've broken through this resistance. You see this resistance up here where we were trading? This is around 17,000, 16,900. It's a really decent level right here that acted as resistance a few times where the price got rejected. We broke through this week on what Jerome was saying. And as you can see, we're having a absolutely classic retest of this support. Now we're actually below 17,000, right? And 17,000 is a round number that people will see as a support level. And they'll think, well, no, we've broken through 17, so we're going lower. Not necessarily the case. My line right here is actually 16,887, a little bit higher maybe. You can actually see that the main resistance level is just under 17,000. And so I actually think we're testing this support line pretty well. So as you can see here, a little test, that's actually really good, right? You're retesting this level because you broke through it, going to retest this. Now, if we stay around this level for a while, then that is definitely a new support level. And then you'd be looking at potentially going up to this next resistance at around 17,500. So that's actually a fairly tradable range, but it's going to depend on a lot of the data that comes out, which is why it's really difficult to trade right now. If you are a trader, up to $8,000 deposit bonus on BitGet. I'll leave that in the description. They're doing completely commission-free spot trading now as well. So if you're an investor, you can buy commission-free and then take it out to your wallet. Link in the description for the details there. We are now in a phase where all the Fed's nonsense is starting to flip because the economy is now starting to completely collapse. So is that positive or negative for the market? Because we know the market prices in the future. So the main question I'm asking myself now is the market going to look past the recession and actually start pricing in a way more dovish Fed, right? And then therefore just rally? Or is it still yet to price in the actual recession? Like, has the stock market, as you can see here, come down enough, right? Or is it going to start pricing in earnings and a real recession and start coming down again, right? Very difficult to understand because we don't know how much the market has priced in. We don't know how deep that recession is going to be. Very, very difficult. But right now you can see we're right on this resistance line of this downtrend in the S&P 500. Right? And as you can see as well, what you can see here is the US 2-year. Remember when the Fed was saying we're going to raise to like 7%, we're going to raise forever. That just isn't true. You can see that right here. The market got to this level that we put on months ago at 4.6 and is now starting to get rejected off of this resistance level. The market always prices in lowering rates before the Fed officially flips. And you can see the data right here. You can see the candlestick chart right here is the US 2-year, right, which is an open market rate. So the market supply and demand dictates that. And as you can see, it always front runs the Fed. It peaks and moves down, and the Fed here, they actually raised one more time and then kept it there, waited and waited and waited, and then started dropping the official Fed funds rate. As we can see here, this is doing the exact same thing. The market itself has topped and can potentially start to price in, lower rates than we were expecting. People were expecting 6%, 7%, nonsense, right? The market is starting to tell us right now that the economic data is starting to crumble and the Fed is not going to have to raise as much as it kind of was pretending it had to raise. Because to be fair to them, inflation's so high, they just have to say, we're going to raise rates until the economy absolutely crumbles to get inflation down. Well, that's kind of happening, right? And so their rhetoric is going to start to change because they definitely don't want deflation and a massive crumble. So we are like right in it right now where we're actually waiting for the economic data to find out how high the Fed can actually go. but they're definitely not going to get up to rates. You can see rates always kind of front run, go way higher. They try and price in that terminal rate way before the Fed gets there. The Fed is always behind. The difficulty is, of course, is trying to figure out whether we just price in the lower rates and the cuts straight away, or whether we have some of this recession to be still priced in for both Bitcoin and the stock market. At the very least, what we're going to be getting is softening of the economy and, fairly more dovish statements from central banks, but they're not going to be coming out here cutting rates to zero and start stimulating with money printing, right? It's just not the time for that over the next, 3 months, right? Even 6 months. At the very least, at the very best, what you're going to be getting is some slightly softer tones, some slightly more accommodative policy where they say, well, if things get really worse, we can definitely look at rates, but they're not going to start cutting to 0%, sending at-risk assets to the moon, right? That's just not the phase that we're in, but that's good. That is actually good. We want to set some sort of normality in the market. And as you can see here from on-chain, this is on-chain data and more fundamental data. Bitcoin is right on track. You can see the previous bear markets right here in between cycles. 2014-15 was 10 months down in this zone. This is cost basis versus market cost basis. When it gets in this zone, which is this pinkish color right here, typically is a bottoming zone, right? Not the bottom, but a zone of, real pain. So you had 10 months worth of that in 2014-15. You had 2 months worth of it in 2018-19. And right here, we're just going for 20 days, okay? So there is still plenty of time where we get this process of just coming to some normality and realizing that all of the interest rate hikes and the QT, has worked. And now we have to look at some more normality, not a ripping, roaring, rate-cutting, stimulating bull market, but actually some more normality, which is actually quite good if you're a long-term investor, because these are the zones, right? If you are having a time horizon of like more than 6 months. So no bull market for me, but there are signs that this whole rate hike cycle is basically at an end right now. And there's going to be a few more months of people arguing over what exactly the rate will be. But I think it's basically done. And now towards next year, we're going through a new market phase where you're seeing markets try and actually stabilize and move forward out of this. So I think it's a very pivotal time right here. And I just want to show you this. This is signal. Most of the rest is noise. Daily number of active addresses on the Bitcoin network just continually makes a set of higher lows during each cycle. The network is strong. Other networks are strong and adding users as well. That is the signal. And a lot of this news is the noise. If you are a trader, check out the deposit bonus on BitGet and free spot trades there as well. So you can, invest in crypto and then take it out to your wallet. Link in the description for those details. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.